Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market rundown, we'll look at commodities in their own separate video later this weekend. So one thing I want to point out right off the bat is that the S&P 500 levels and SPY are a bit different because SPY had a dividend distribution on Friday, and what that does is artificially adjust the price for that dividend, so it drops the price down. So if you look at SPY on the daily time frame here, SPY has broken the low of the FOMC due to the artificial change in price. That's no good for me because artificial means not real. If we look at SPX, which is the true levels of the S&P 500 index, we're holding those lows at this point. So we are technically still in a daily uptrend, although we did see that pullback on Friday. Also worth noting is that QQQ has a dividend distribution on Monday, and it'll be the same thing there as well, with an artificial drop in the price to adjust for that dividend. So where we stand right now after a boring morning Friday with an exciting middle of the day, thanks to Chinese diplomats leaving the US early and people perceiving that as negative on trade talks. But the bottom line is we have the same thing where we had the FOMC reaction, not really a bearish reaction, and then China trade war stuff leading to weakness after the FOMC. Last time this happened was leading into the dump for August, and we're watching to see how significant this weakness is going to be to start this coming week. We're also at an interesting standpoint where, technically speaking, it makes perfect sense to be both bullish and bearish on this chart right now. How does it make sense to be bullish? We're in a daily uptrend, we're in a weekly uptrend, and the all-time high is right there. We're certainly very close to a new all-time high on the S&P 500. We would have to see about a 1.2% move after just rejecting from that level this past week. How does it make sense to be bearish? We have very clear top fishing levels, and a top fish is when we look at a clear resistance level, we put our stop above it, and we make a bearish entry. So I've talked a little bit in the recent past about hedging long-term portfolios with this current setup, or just being straight up bearish as long as you have a stop loss in place. One thing that I don't like is going bearish against an uptrend and when there's no clear level. So look back here on the SPX, breaking 29.54 to a new all-time high. Daily uptrend took us all the way to 30.28. So if you're bearish over that 29.54 level, you have no clear level to stop yourself out. But in this instance, we have multiple tops on a bunch of different markets and individual names, and it's very easy to have a clearly defined risk and a trade game plan based off of those resistance levels. So absolutely logical to be either bullish or bearish in this market as long as your trade game plan is laid out and your stop loss levels and target levels are set. So all I'm going to be caring about tomorrow or next week, first thing, is going to be the low of the FOMC. Can 29.78 hold, or is that level going to break and we lose the daily uptrend? If that level breaks, we then zoom out to the weekly chart and we expect a weekly higher low to form compared to the August lows. In my opinion, if we are going to drop down from here and break the August lows, we're going to have to see significant daily bear volume for a number of days. We're going to have to see significant bearish headlines leading to that. It's absolutely possible, but it won't happen without the volume, and we'll certainly be able to see and make note of that volume. If we don't have significant bearish volume, well over the 20-day average volume, then we're going to look for a weekly higher low to form if we lose that daily uptrend. And we'll have our all-time high, low of the August dump, lower high, and we will scout a higher low. And this weekly range could potentially tighten up all the way into November if that is the way it's going to play out. For example, if we were to just speculate, let's see if we were to pull back, set a weekly higher low after 2 more weeks of consolidation. That takes us into early October. We get a little bit of a bounce and look for a lower high into I'd say late October is when we would see a weekly break if we are looking at a normal volume pullback and just a weekly higher low to form. So there's a lot of what ifs there, but it all is dependent on, first things first, the low of the FOMC reaction. If that level does not break, the bulls keep full control. If that level does break, double top narrative is going to be talked about a lot, and we're going to be pulling back on the weekly time frame. IWM, we're going to start looking at everything on the weekly charts. Bigger picture first, we have our high, low, lower high, and we did end up dropping to a lower low, but just barely. and now another lower high. So 159.23 was resistance. We got up to 158.92, real close to that level, but we did reject. Are we still in a daily uptrend on IWM? Yes, as far as I'm concerned, we are looking for a daily higher low to form. Our last clear daily higher low was down at 146. So if we are going to see significant further weakness in IWM, it would require for me a daily lower high and lower low. Set a daily base of support, try and see continuation and fail, and then lose that daily uptrend. But again, bigger picture weekly chart, very clear double top of resistance, and then we're looking down at the August low if we do lose the daily uptrend. QQQ weekly chart, all-time high was not broken. If you've been watching these videos for a while, you can remember me saying within the last month, if the S&P 500 gets a new all-time high but QQQ does not, we take that with a grain of salt, because we want to see the tech sector and the financial sector and the major players in the S&P 500 as far as sectors go breaking their resistances as well. And I use this logic every single day when I day trade. If the S&P 500 breaks the high of the day and XLF or QQQ breaks the high of the day and the other does not, I know that the bulls in the S&P 500 are not going to get very far unless both sectors are breaking their resistance at the same time. So same thing here. SPY got the all-time high, SPX did not, but QQQ not getting that all-time high was definitely informative. So daily uptrend on QQQ, look at that low, it's being tested, the FOMC 190.11. It held on Friday, but if that level breaks, it's a daily lower high and lower low. We will then be in a daily downtrend. We zoom out to the weekly chart, and we see, can the bulls hold the August dump lows 179.20? Again, is it possible to just drop down and break that level? Yes, but it will require a lot of bear volume that will be very visible to us if that is on the table. If we don't see significant daily bear volume, we look for a weekly higher low and an equilibrium to play out into and potentially through October. XLF, 28.72 was resistance. We rejected from 28.67. So again, these double tops are everywhere. The daily time frame, you could say we lost a daily higher low. It all depends on how you look at things. We still have a lot of space to pull back and remain pretty healthy on this daily chart. But if we're looking at it on a weekly perspective, we have that rejection from resistance, and we're now going to be looking at the low of August. 25.92 is a double bottom. We have a double bottom and a double top, and we have been within this range now on XLF since April. So that's a 5-month range on the second largest holding in the S&P 500, and you better believe when that 5-month range breaks, it's going to be notable. So if we pull back, again, all dependent on volume. If the bears have big bear volume, we're looking at 25.92. If they don't, we're looking for a higher low compared to 25.92 and a tightening weekly range. XLV on the weekly chart didn't even get that close to 94.42. We're looking back at the lows of August as a key support to keep the weekly uptrend intact. But we're not that weak on the daily. Daily chart held on pretty strong. Definitely upper wicks here, seeing resistance, seeing multiple tops in the 92.40s, 92.50s. Anything on the daily chart above 90.79 is a daily higher low. We would have to break 90.79 to be looking at weekly consolidation to be underway. Biotech sector, weekly chart, anything under 87.70 was just a lower high. So we're looking for a lower high to be set on this weekly time frame. Are we still in a daily uptrend? Yes, we're still in that 7-day range that we've been watching. It's now an 8-day range. We have our low and our high, and we are looking for a break of this range, 81.73 to 84.12. We're $1 above support, and we are $1.40 below resistance. So we're pretty close to the middle of that range, and that's a short-term tight range to be watching. And last, we got the VIX. The weekly time frame on the VIX is trying to set a higher low compared to the 1170 level. If we look at the daily chart, we have short-term resistance that has not broken yet. 1580 is a little double top. So bulls have to get over that level to see some momentum in their favor short term. Then we're looking at 1650 as the next level after that. But a notable big green day, and the first time we've closed higher than we've opened in a very long time. So a little bit of a notable shift there as well. It pretty much just shows us that the SPY bulls were not buying the dip into the end of the day Friday. So we'll see what other potential headlines come out on Friday. We've got the U.S. sending troops to Saudi Arabia. We'll see if escalations go on over there. But bottom line is very clear resistance. Daily uptrends for the most part still intact. And as far as individual names go, we can look who's closer. If I'm looking at a sector, and I'm looking at QQQ, the tech sector, and I'm looking at Amazon, I'm comparing individual names. So Amazon what distance are we percentage-wise above our August lows? And the answer is less than 3%. So I look at the weekly time frame for Amazon. We're going to see a weekly downtrend for the first time in a long time if this weakness continues in the market. Even just a small amount of weakness, looking for a higher low on SPY's weekly chart, we'll likely see Amazon drop to a lower low. And if I compare that to Apple, also in the tech sector, look at how much space Apple has before we break the August lows. And your answer is, percentage-wise, 11.5%. So I can say very distinctly, that's how I gauge who's stronger and who's weaker in a sector. Percentage distance from August lows is one way to do that. And I can literally number the individual names and say, okay, these 3 names are stronger, these 3 names are weaker, and how to use that information. If I'm a swing trader and I see further pullback and SPY lose the daily uptrend and I'm looking for SPY to pull back on the weekly, I'm going to play the weaker names bearish. And if the S&P 500 forms a weekly higher low and stays in a tightening range, that tells me to watch the stronger names for healthy weekly higher lows as well. So that's just a little bit of insight into how I look at individual names in a given sector. And that's our market wrap up. Have a good rest of your weekend, and we'll see you on Monday.